Well, hello, folks. It's Courtney and Javon here with the floating square, icons with our videos up here. But I'm back here with another episode of Life and Transitions Experts podcast. Here again as a certified probate expert and senior transition specialist. Here we try to really help families and people who are dealing with either probate or perhaps they're dealing with figuring out ways they can support a family member to get them into a community or a space that's fitting for their current needs. And quite often there's a house involved or property involved, and we can offer some caring solutions for that property, whether that's us as buyers or us helping you get top dollar on the MLS, or perhaps finding ways that you can keep the property yourself and turning into something that generates income or fits your needs. Whatever it is, we try to really help you come up with the proper type of solutions. And today we're actually going to talk about one of those challenges that come up quite often, but what's so great about challenges also has solutions when the property fits. But I'm just babbling. Let me say what's up to Javon. How's it going, Javon?
Yeah, what's going on? How y'all people doing today?
Yeah,
hopefully,
man.
good day for y'all.
So, Javon, have you come across a situation? I know it's leading questions. I know you have, but where a seller just wants to sell the property, but they don't have, but the mortgage is so high it's worth more than what the property is worth quite often.
Yeah, I think I ran across a few situations in regards to that. You know, the mortgage is a certain amount, but the property isn't worth as much as the mortgage is actually on a home. Yeah, I've actually ran across that a few.
And traditionally, us as cash buyers, we're trying to get the property at a discount. So that makes that a challenge. Let me go into here and go a little deeper. Let me scale down our pretty faces too. Let's see. All right. So you may want to sell, but it has a mortgage on there. It costs more than the house is worth. So it doesn't necessarily mean that the mortgage is more than the house is worth. I don't want to misconstrue. What I'm saying is that let's say you have a property that's only worth $100,000. Or it's worth $100,000, but it has a mortgage of $90,000. Selling it to someone like a cash buyer who quite often is trading speed and convenience for that discounted price, no longer can buy that property for 90 or 80 or 70 because there's still that remaining mortgage on there. So the challenge is, for us, like I said, cash buyers, we usually need it at a deep discount that trading speed and convenience. And if there's something owed on it, it's very hard to get that deep discount. And if you try to take it to the normal market and sell it to a traditional buyer, a bank is going to want to, or financial institutions quite often lending to that person isn't going to lend enough money on that property because they usually they want it at a discount too. They want to lend at a discount. So if the property is worth $100,000, they may lend top 70% of that, $70,000. And if you owe $90,000, you see there's a $20,000 difference, and there's a challenge right there. So one of the solutions that could happen for this is if you have a buyer and if the property fits the proper criteria, is a buyer could actually step in and take over the existing payments on that loan. And what that would do is relieve you of the monthly payments, and also relieves you of the duty of home ownership, whether you're a landlord or perhaps you're just the traditional property owner. I just went back the other direction. Let's see. So the great thing about this as a buyer, like someone like me, I get to come in at usually a low price point and directly start taking over payments. I receive the deed, the buyer receives the title, full responsibilities of the taxes, utilities, insurance, and the upkeep. And so I get to enter at a very low entry level, and that's awesome. And I get to have the deed and the title. That's awesome. And I don't have the burden of going to the bank and having to fill out so much paperwork. So speed and convenience is very awesome, which is great quite often for the seller as well. It's usually what they're looking for. So the speed, the convenience, and the transfer of ownership can happen just like that. Now, one of the challenges, but also one of the reasons this makes this a great deal structure is that the loan will stay in the seller's name during the duration of the agreed upon time. So whether you agreed on 36 months, 5 years, 3 months, whatever it is, it does stay in the seller's name at that time until the property is refinanced out, which is either resold or refinanced. Again, you get to avoid the banks quickly because of this, but this is definitely why you want to make sure you have a vetted seller and buyer, because you don't want to be a buyer, then your seller's going playing around with the loan and you think you're making payments on a particular loan and now it's not proper, or a buyer, you don't want a buyer that comes in and now the loan stays in your name and they're not honoring their what they said they're going to do. Now the payments can either be made directly to the lender or use a third-party note servicer. I'll highly recommend that if you are a seller, that you don't take money directly from the buyer and then pay, even though they may make you feel more comfortable. To make sure everyone feels comfortable, I would definitely have them send it directly to the lender where everyone can see it, or ideally use a third-party note servicer, which usually charges about $25 to $50 a month. But it's a great way to make sure everyone knows what's going on and that the bills are being paid. Now, Javon, you may have heard of some people asking, some don't know about this, but the due on sales clause, it's in every contract. So on your contract of due on sales, basically, it says if you transfer interest, transfer ownership of this deed, then we can just say, hey, all the money's due on the transfer of the sale. Now all the money you owe me is due. Now, to be quite honest, due on sales clause is like when you're driving in the 45-mile-an-hour lane and you may be driving 48 miles an hour. In all my experience, I've never even heard anyone ever actually any institution call it the due on sales. I'm sure it's happened before, but it very rarely ever, if ever, happens. The institution is more concerned about receiving their monthly payment. And the buyer should be in direct contact with the lender, let them know this is how we're making the payments. It's just the same as if you had someone as a renter in your property making those monthly payments. The bank wants to make sure that they are getting paid every month. But also the legal way to do this though is if you purchase this with a trust, or so the buyer purchases it with a trust, then legally you can transfer interest into a trust without triggering the due on sales clause. I'm not a lawyer, I'm not an attorney, I'm not a financial advisor, but make sure you just check in your state and your local municipalities to make sure you're doing it properly. But that is the way that you will be able to do it without knowing that you legally can't trigger the due on sales clause. But to be quite honest, the many transactions that many people I know have done and the ones I've done in the past, I haven't even had to do this because, again, the institutions want their money. Now, what if the buyer gets hit by a bus or there's some scammer or something? You definitely need to make sure you put in your purchase agreement. Well, it's already it's embedded or inferred in there, but make sure you clearly state, if this person is late by this many days or this many months or this many whatever, then I can begin the foreclosure process and you receive the property and the deed back in your name without having to refund any of the payments or down payments that they've made. So those are some ways. There are other provisions and stuff you could put in to protect yourself as the seller. But it'd be a very short-lived business model if you were a buyer attempting to do this, because again, it's not you're not going to last long. So here's so that's it right there. Javon, I just wanted to go over with sellers, and Javon and I are going to just talk separately to see what questions they may have. But Estate Pro Service, we offer a full concierge service for the probate process, and we can help you out any way. I'd love for you to hit like or a comment if you're on this and you have any questions at all. And in fact, let me just open it up. Javon, I know I was talking more to like a seller of a property there, but what questions might you have as someone who's helping people see this, or even just listening to it yourself, or thoughts you have?
I mean, as you know, I've dealt with these type of deals a few times, and honestly, I have really no questions in regards to it. I'll say in our field, and as of right now, I do run up into a lot of buyers who was actually interested in deals like this simply because of the fact they don't have to put that gargantuan bulk of money down up front. I mean, this way they can get into the property, do what they need to do, and go from there. So these they're really good deals, to be honest. They're really great.
That's a great point. I call them one of like those win-win-win or win-win situations because the seller, depending on what the down payment is, if there is a down payment, they're going to be able to sometimes get the full asking price that they want if they're willing to, wait a little bit, and they get relieved of the monthly burden of the monthly payment. So this is a great way to get the full asking price. And again, I'm not a financial advisor, but there's tax implications that are beneficial to taking your money over time than just taking a bulk and getting capital gains tax. So it is awesome. It's awesome for the buyer. Just you explained all the reasons why it's awesome for the buyer. But it's an awesome process that's done every day, all the time. And you, as one thing I want you to think about is you see, because right now, as of last August, the market really changed. Sellers last couple of years could put anything out and the thing would sell. But now the market's adjusted with interest rates and all that stuff. Seller expectations are still sometimes here, and buyers are, being smart, trying to buy even deeper. And so this is an opportunity for a seller, for us as, to present the seller, hey, we can still get you the price that you want or what you need if you're able to do it on these terms. And we don't try to over explain to folks at all. As people express interest and they want more interest, and then Javon and I will sit down with them and explain some things to them and make sure those two big questions are answered: the due on sales, and what happens if we're if you get run over, we stop making payments. Yeah, appreciate it.
Like sub deals, they're really, some of them, they're really easy to get rid of, and they're really easy to do. However, I mean, as you know, there's a lot of small details that actually go into these things,
and we can all and
a lot of details. I just think they're great deals. They're easy to do with it, and as you said, this is a win-win, a win for the buyer, a win for the seller. You get all your money. You might not get it all up front, but you'll end up getting all the money that you're actually looking at, that you believe that your property is worth.
So that's another, for your perspective, is you're calling people, trying to serve folks. What are some things that you hear that makes you think, okay, maybe this is something to present to the seller, or like what are some buzzwords that people, if they're watching as someone trying to help people in this scenario?
I mean, one main thing is what you said at the beginning of this. Like, I owe more than what it's worth. I'm not going to get what it's worth. However, I'm not going. If I sell, I'm not going to get what I owe. I mean,
okay, perfect. All right, so you hear those type of buzzwords. I want to sell, but I got the mortgage, all that stuff on there. So if you hear that stuff, those are buzzwords. Now, what about you when you present to them? Like, how do you introduce even this concept or this idea?
I mean, I firmly believe the best way to actually even throw out this idea is to kind of give them different options. When you actually present this idea, you give them different options. I mean, one option might sound better than the next, or whatever the case. When they hear this one specific option of, hey, you're going to get everything that you say that you wanted, but however, it might take a little while to actually get it. However, you're going to get it every month, or whatever the case. People actually say, okay, that sounds good. That
is awesome. That's a technique folks to use. Like giving people ranges will help them understand clarity of what the rules are. If you just give them here's the price that we can offer, it's like the only rules is a yes or no. But if you give them a range, it's like, oh, here's some options. Here's some people start becoming creative and start really thinking of how to make things work. One thing I would add right before that is I would sometimes just ask them, say, Alexa, stop. I would just say, Alexa, stop. If we could get you that price you're interested in, would you be interested in terms? I use the word terms, TERMS. Shout out to Pace Morby, because it's familiar, but it's also enough like, what do you mean? Now I don't try to go forward. I don't ever say, would you be interested in taking over your property subject to? It's right there on the HUD line 403C. It's something, because I don't want to confuse mine. It says no. I don't want to confuse them. So I'll just ask them, ask them, hey, would you be interested in terms? They say, well, what do you mean by that? Like, well, it's where we can take over payments and if we agree on the price, we can take over the payments and get you the price you want over time. Of course, the details we could work out. In fact, if you're Javon, you might say the details would work out. In fact, I could connect you with Courtney, and he can go over more details and see if there's an option, if if it fits. Is that something you'd be interested in, or probably not? Something like that, Yes, sir. All right, man. I was trying to get this under 10 minutes. I think I didn't do a good job at all. I think it's 17, 18. So I might have to do another video. I wanted this to be real convenient for sellers to understand ways that they could actually still get the top dollar. But regardless, I hope this was helpful to everyone. Javon, I appreciate you talking and chatting me and thinking about it. And other than that, I'm signing off. Here comes a hot deal. Let me stop the recording. Rising tides, folks.